Gold, symbol of wealth and trust. Gold has fascinated humanity for thousands of years. It has always been more than just a metal. It represented power, stability, and survival. Kings stored it, nations traded with it, and ordinary people trusted it when everything else seemed uncertain. Even today, when economies fluctuate and currencies lose value, people return to gold because it feels permanent, physical, and dependable in a way few things do. Throughout history, gold has symbolized security in times of crisis. When systems collapsed and paper money lost value, gold remained. This deep psychological association between gold and safety is what makes it unique among all other assets. Why gold attracts fraud? But that same trust also creates opportunity for deception. Whenever something becomes valuable and emotionally important, it attracts those who want to exploit it. Gold is difficult for the average person to verify, and most people do not have the tools or expertise to confirm authenticity. Buyers often rely on certificates, packaging, or the reputation of a seller. Fraudsters understand this psychology perfectly. They know that when people believe they are making a safe investment, they stop asking difficult questions. Trust replaces verification, and that is exactly where manipulation begins. Gold fraud is not just about money, it is about exploiting belief, expectation, and human emotion. From ancient to modern scams, gold fraud is not new. In ancient Rome, counterfeit coins were coated with thin layers of gold to deceive buyers and traders. The technique was simple but effective. People trusted what they saw. Today, technology has transformed scams into something far more sophisticated. Criminals use tungsten cores, industrial manufacturing, and perfectly replicated documentation. Some counterfeits are so realistic that even professionals struggle to identify them without laboratory testing. The lesson is clear and timeless. The shine of gold inspires trust, but that same shine can hide deception. Tungsten gold bar scandal. In 2012, the global gold market experienced a discovery that shocked investors and dealers alike. In New York, several gold bars were found that appeared completely authentic. Perfect weight, perfect shape, official markings. Yet inside, they contained tungsten. These were not amateur fakes. They were carefully engineered to pass inspection and circulate through legitimate markets. One of these bars reached a respected Manhattan dealer, proving that even experienced professionals could be deceived. The discovery immediately raised a disturbing question: how many more were already in circulation? Industrial counterfeiting. Investigations revealed that the counterfeit bars were produced on an industrial scale. Organized groups had identified tungsten as the ideal material because its density closely matches gold. By coating it with real gold, they created bars that behaved and looked authentic in nearly every way. Factories were producing these bars with precision, packaging them professionally, and distributing them through global channels. This was not small-scale fraud. It was systematic, calculated, and international. The level of organization showed that gold counterfeiting had evolved into a serious industry. Financial impact and lessons. Each fake bar was worth around $18,000. Losses reached millions, but the psychological shock was even greater. Investors realized that visual inspection and documentation were no longer enough. Trust in traditional verification collapsed. Dealers began rethinking procedures and buyers became more cautious. The scandal delivered a powerful message: even the most trusted markets are vulnerable. If professionals in financial centers like New York can be fooled, then anyone, from collectors to investors, can become a victim. Gold had always represented certainty. This moment proved that certainty itself can be counterfeited. Fake American gold eagles. In 2018, the United States Mint issued a warning that shocked collectors and investors across the world. Tens of thousands of counterfeit American gold eagle coins had entered circulation. These were not crude imitations. They were highly detailed, visually convincing, and designed to pass as official currency-backed gold. Many buyers believed they were purchasing safe, government-certified investments. The coins looked authentic, felt authentic, and even carried markings that matched real production standards. For many people, there was no reason to doubt them. How the coins were made. The counterfeit coins were produced with impressive technical precision. Their cores were made from copper or tungsten, materials chosen for their weight and durability. They were then coated with thin layers of real gold to create the appearance of authenticity. Packaging, labeling, and presentation were carefully designed to mirror official products. Online marketplaces made distribution fast and global. Sellers used professional photos, believable descriptions, and attractive pricing to build trust. Without specialized testing, distinguishing real from fake became extremely difficult. The damage and victims. Thousands of individuals lost money. Collectors, investors, and even small jewelry shops accepted the coins believing they were legitimate. Total losses exceeded $10 million. The emotional impact was just as significant as the financial one. People realized how easily trust could be manipulated in a digital marketplace where purchases happen quickly and often without direct verification. This case revealed a powerful truth. In the modern world, fraud spreads at the speed of the internet, and gold, once considered the safest asset, is no exception. Online gold scams in Germany. In 2020, German authorities uncovered a complex online fraud operation that targeted investors searching for secure assets. Criminal groups sold so-called investment gold through trusted platforms like eBay and Amazon Marketplace. Buyers received professionally packaged bars, complete with certificates and secure-looking branding. Everything about the purchase felt legitimate. For many customers, there was no warning sign, no moment of suspicion. They believed they were making a safe, long-term investment. Fake bar composition. Testing later revealed the truth. The bars were not gold at all. They were made of brass and coated with a thin layer of gold plating. Visually, they passed inspection and fooled buyers who relied on appearance and presentation. Only laboratory testing exposed the deception. The scam worked because it used familiarity. People trusted online platforms. They trusted professional packaging. They trusted the idea that gold is always safe. Arrests and consequences. Authorities eventually arrested the main suspects and courts issued prison sentences. More than 200 victims were identified and financial damage reached millions of euros. But the deeper lesson was psychological. Fraud today does not happen only in dark alleys or hidden markets. It happens on platforms people use every day. Trust has become automated. And when verification disappears, deception becomes easier than ever. The Bre-X mining scandal. In 1997, a Canadian company called Bre-X announced what appeared to be one of the greatest gold discoveries in modern history. Deep in the jungles of Indonesia, they claimed to have found a massive deposit worth more than $6 billion. Investors around the world reacted immediately. The company's stock price soared, and thousands of people invested their savings. The story captured global attention. It promised wealth, opportunity, and a historic breakthrough. Everything seemed real. How the fraud worked. But the discovery was not real. Investigations later revealed that drill samples had been deliberately manipulated. Gold dust had been added to the samples, a method known as salting, to create the illusion of a rich deposit. The company's value grew based on false data, excitement, and belief. Markets responded to hope rather than reality. It was a perfect example of how easily financial systems can be influenced when trust replaces verification. Collapse and impact. When the fraud was exposed, the collapse was immediate and devastating. The company's value disappeared almost overnight. Thousands of investors lost their savings, and total losses reached billions of dollars. The scandal became one of the most dramatic financial frauds in history. It showed how powerful belief can be and how dangerous it becomes when people stop questioning what they want to believe. Gold had once again proven that its greatest strength, trust, can also become its greatest vulnerability. Bank price manipulation. When people imagine gold fraud, they usually think about fake bars, counterfeit coins, or stolen assets. But sometimes the manipulation happens at a much higher level. Inside the financial institutions people trust the most. In 2014, it became public that some of the world's largest banks had been influencing the global price of gold during daily benchmark meetings known as the London Gold Fixing. These meetings were meant to establish fair market value, a reference price used worldwide. Instead, they became a tool for influence. Nature of the fraud. These institutions did not need to counterfeit gold itself. They influenced something even more powerful: perception. By coordinating trades and sharing strategies during price-setting sessions, they shaped how the market moved. Investors believed the price was natural and objective. In reality, it was sometimes guided behind closed doors. This kind of fraud is harder to detect because nothing physical appears wrong. No fake bars, no fake coins, only a number on a screen, and that number decides how billions of dollars move. Penalties and consequences. Major banks eventually paid large fines and settlements, but the greater damage was psychological. Trust in financial systems weakened. The scandal revealed an uncomfortable truth. Gold is not only vulnerable to criminals outside the system, but also to those operating within it. Even institutions built on reputation can influence markets when profit becomes the priority. And when trust is shaken at that level, the impact spreads across the entire global economy. Australian Dragon coin counterfeits. In 2018, collectors began hearing warnings about counterfeit versions of the famous Lunar Dragon gold coin produced by the Perth Mint. These coins were popular, recognizable, and valuable, which made them ideal targets. The counterfeit versions appeared almost identical to the originals. For buyers, there was little visual difference, and that made them extremely dangerous. Differences between real and fake. The fake coins were produced using copper cores covered with thin layers of gold. Their weight, shine, and design were carefully replicated. To the untrained eye, they looked legitimate. Genuine coins were worth thousands of dollars. Counterfeit versions sold cheaply on underground markets, but many buyers didn't know the difference. They believed they were purchasing real gold. Trust became the tool that enabled the fraud. Market response. As the counterfeit spread across Asia and Europe, authorities and collectors had to react quickly. The Perth Mint introduced new security measures, including holograms and microscopic engravings. This case showed how quickly counterfeit products can move through global markets. It also highlighted the constant race between innovation and deception. Every time security improves, fraudsters adapt, and the cycle continues. Heathrow Gold Heist, 1983. On a cold morning in November 1983, one of the most dramatic gold robberies in history took place at Heathrow Airport in London. A criminal gang broke into a warehouse linked to the Bre-X security company and stole enormous quantities of gold. It was not a spontaneous crime. It was planned, calculated, and executed with precision. Scale of the crime. The thieves escaped with approximately 3 tons of gold bars. At the time, the value was around £26 million. Today, that amount would be worth more than £100 million. The scale of the operation shocked authorities. It showed how valuable resources like gold could motivate organized, ambitious, and highly coordinated criminal networks. This was not just theft, it was a statement. Aftermath. The stolen gold was melted down and reintroduced into the market through complex criminal and financial channels. Some individuals were eventually arrested and sentenced, but most of the gold was never recovered. The heist became legendary, not only because of the money involved, but because of what it revealed about human motivation. Gold can inspire discipline, ambition, and greatness, but it can also inspire risk, crime, and obsession. Italian jewelry fraud, 2015. In 2015, authorities in Milan uncovered a large jewelry fraud operation. Rings marketed as 18-karat gold were sold to customers who believed they were buying something valuable and permanent. At first, everything seemed legitimate. The rings looked authentic, felt solid, and were sold through trusted channels. But appearances can deceive. Signs of counterfeiting. Over time, customers noticed changes. The gold coating began to fade. The metal underneath darkened. Some rings even showed signs of rust. Investigations revealed the truth. The jewelry was made of brass covered with a thin layer of gold. The fraud relied on visual appeal, presentation, and trust. Buyers did not question the product because it looked right. Legal action. Police arrested multiple individuals connected to the operation and seized large quantities of fake jewelry. Financial damage reached millions of euros, but the case highlighted something deeper than money. It showed how easily everyday consumers can be deceived when something appears valuable. Gold creates expectation, and expectation can sometimes replace caution. Lessons for investors. Looking across all these cases, one message becomes clear: gold fraud exists everywhere. It affects individuals, collectors, institutions, and entire markets. Tens of thousands of people have been scammed, losses reach billions, and the methods continue evolving. Gold is trusted, and that trust is exactly what makes it vulnerable. How to buy gold safely. Buying gold requires more than belief. It requires verification. Investors must rely on official mints, certified dealers, and professional testing whenever possible. Certificates help, but they are not enough on their own. Fraudsters can replicate documents as easily as products. If an offer seems too good to be true, it almost always is. Caution is not weakness, it is protection. Conclusion: gold and trust. Gold itself is neutral. It does not deceive. People do. The real challenge lies in human behavior: desire, fear, ambition, and the promise of security. Every scam shows how powerful these emotions are. Gold represents wealth, stability, and permanence, but it also tests judgment. In the end, gold is not only a metal, it is a mirror of trust and a reminder that trust must always be earned, never assumed.